Welcome back to the deep dive. Today we are swapping the conference room for the coast because we're diving deep into that ultimate aspirational dream.
That dream.
Buying a piece of paradise in Phuket, Thailand.
It's the dream so many people share. But here's the immediate roadblock for anyone who's not a local. How do you actually secure the financing?
Right.
How do you get a mortgage in a foreign market that, operates under entirely different legal and banking rules?
That's the specific puzzle we're trying to solve for you today.
It is.
Exactly. And to help us navigate these, extremely complex waters, we've been relying very heavily on insights from Ocean Worldwide.
Okay.
This is a luxury real estate agency that's been deeply embedded in Phuket since, 2004?
So they've seen it all.
They really have. And crucially, their agency director, Sandra O'Neill, has personally guided thousands of families and investors through this exact financing maze.
So we're pulling knowledge straight from the experts who are on the ground doing this every single day.
That's the goal.
Our mission then is to take that wealth of expertise and just, distill it. We need to break down the specific requirements for foreigners, the major financing options, and maybe most importantly,
The legal warnings.
those critical legal warnings you must heed before you ever even think about approaching a lender.
Okay, so let's unpack this with the initial massive takeaway. Foreign mortgages are possible.
They are.
But the Thai banking system is not designed to make it easy. The path is very narrow.
That's the crux of it, really. The key banks to look at are Bangkok Bank, Kazakhstan, and UOB. But your success is entirely contingent on understanding the legal framework and the potential pitfalls before you apply.
So if your paperwork isn't perfect,
It'll fail immediately. Or if your chosen property type doesn't fit their very specific collateral criteria, the application just stops right there.
let's start with the motivation then. We all know the beaches are stunning, the food is incredible, but is this still just a holiday market? The sources suggest the market is really picking up steam.
Oh, it's moved well past the holiday home status.
Really?
Absolutely. Since Thailand fully reopened its borders, the entire investment landscape has fundamentally changed. We're not just seeing short-term vacationers.
Yeah.
We're seeing a significant influx of high net worth individuals and families looking for, semi-permanent residency.
And that stability changes things.
It transforms the market from a simple bolt hole into a really solid investment angle.
So we're seeing tangible financial upside now.
Without a doubt.
Yeah.
The sustained demand, particularly for these high-quality properties.
Sea views, private pools, that kind of thing.
Exactly. That translates directly into two things. First, potential capital appreciation. The price of prime assets is rising.
And second,
Steady rental income. If you buy a property that's suitable for short-term holiday lets, the cash flow can be excellent.
which is why those popular areas like Patong or the historic Old Town are such hubs.
That's it. Patong for its buzz and Old Town for its culture and architecture. Great investment spots.
So when someone starts looking, what are they usually buying? The source material outlines three main categories.
Well, the first, and often the most straightforward for a foreigner, is the condominium.
The entry point.
It's the entry point. They're convenient, they're near amenities, and critically, they are the type of property most banks are actually willing to lend against.
Then you move up to the luxurious end, the villas. Space, privacy, pools.
The iconic views everyone associates with Phuket.
And finally, for the really ambitious buyer.
You have raw land plots for a custom build or for a long-term developer play.
But the choice you make there, it directly impacts whether you can even get financing, right?
It's a major strategic decision. The lure of that private pool villa is so strong, but we need to slam the brakes on that dream for just a second.
Because the requirements to finance it are the real reality check.
They really are.
You mentioned that banks view foreign buyers with a slightly higher risk profile. So what specific immigration requirements do Thai lenders insist on? They are not, as you said, handing out cash willy-nilly.
No, that risk profile translates directly into an established presence requirement.
A stable base.
You need a stable base. To satisfy most Thai lenders, this usually means a valid work permit, and often they want to see you've held it for at least a year.
A whole year.
A Thai resident permit will also generally suffice. But either way, you will need an official letter from your employer,
Confirming what exactly?
your tenure, your position, and your income history.
This sounds less like a simple loan application and more like a detailed financial stress test. What about income verification?
It is a challenge by design. Banks require documented proof of consistent, reliable income.
So pay slips, tax returns.
All of it. Company documents if you're self-employed. But the most rigid defining rule they enforce is this.
Okay.
Your fixed monthly income must be at least 3 times the amount of the required monthly mortgage repayment.
3 times. That isn't just a safety buffer.
Right.
That suggests the bank needs assurance you can withstand a massive financial shock, like losing a job, and still not miss that payment.
Precisely. They need to see that cushion. And that is why a clean, verifiable credit history is so beneficial.
Any red flags and you're out.
Any red flags in your financial past will make this already difficult process nearly impossible.
I noticed an extremely specific constraint on age in the materials, which completely changes the math for older buyers.
Yes, the age cap is a hard stop. The total loan term, combined with the applicant's current age, it should usually not exceed 60 years.
So let's take a hypothetical. A successful entrepreneur, say 50 years old.
They are automatically capped at a maximum 10-year loan term.
Wait, a 10-year term changes the affordability equation entirely.
It does.
That means their monthly repayment is dramatically higher than a 30-year-old applying for the same loan.
Which makes that 3 times income rule even harder to meet.
So is the Thai banking system essentially reserving this financing for younger, long-term expats?
It's certainly biased towards stability and low risks. They want a maximum security and a fast return on the loan, which shorter terms guarantee. It's a reflection of the legal difficulties here, which we should get into.
Okay, let's talk brass tacks, the actual costs. As a foreigner, you need to expect interest rates that are notably higher than what a Thai national would pay.
Right. And as we just established, long terms are shorter, often capping out at 10 to 20 years.
Which brings us to the biggest immediate financial hurdle.
The down payment.
And it is substantial.
It is often 30, sometimes even 40% of the property's price required up front.
40% down. That is a massive chunk of liquid capital to have on day one.
It is.
But here's where it gets really insightful. That 40% down payment isn't just a cost. It's the bank's protection against Thailand's unique, stringent foreign land laws.
That is the essential insight. If we connect this to the bigger picture, banks are looking for clear collateral they can easily seize if the loan defaults.
Right.
Which is why the sources are so clear on this point. Foreigners can generally only get a mortgage for a completed condominium unit that they own outright.
Why is that distinction between a condo and a villa so absolute when it comes to lending?
It all comes down to the structure of ownership. Under Thai law, foreigners are allowed to own a condominium unit in freehold, meaning full outright ownership, as long as the building follows the 49% foreign quota rule.
So the bank feels secure because the ownership is straightforward.
It's straightforward and it's verifiable. But villas, which often come with land plots,
That's where the complexity explodes.
it really does. Foreigners generally cannot own land freehold. So to purchase a villa, you have to rely on these complex structures, like long-term leaseholds or setting up a Thai majority company to hold the land.
And banks won't accept those structures as collateral.
No, they see them as legally fragile, too messy for them to trust for a mortgage.
So no bank financing for off-plan properties or land ownership schemes?
Usually not, no. And this leads directly to the absolute necessity of doing your legal homework. If you are looking at a villa, you need expert legal advice, period.
You have to verify the property's legal standing, check for outstanding debts.
Make sure there are, as the source says, no nasty surprises tied to that land title before you even think about a cash transaction.
So that advice to hire a legal expert who really knows Thai property law is paramount.
It's non-negotiable. You need a specialist to navigate those leaseholds and to make sure your investment is actually protected, especially since the bank won't be protecting you with a mortgage in that scenario.
Okay, so let's assume we have the cash, we've settled on a completed condo, and we get the legal warnings. What does the actual application flow look like?
Preparation is everything. The sources outline a clear 5-step process, and step 1 is always securing pre-approval.
So you set your realistic budget first.
Immediately. It stops you from falling in love with a property you can't finance. Then, and only then, do you start the property search.
And you find a beautiful 2-bedroom condo near Layan Beach that fits the budget. What's next?
Then comes the formal application, submitting all of that meticulously gathered documentation.
The list is demanding, I bet.
Oh yeah, your passport, 3 to 6 months of verifiable bank statements, comprehensive proof of income payslips, tax returns, and the official property sale agreement.
Once that's all submitted,
The bank will commission a property valuation. They need to ensure the asset is actually worth the price you're paying. If all that checks out, you get the approval and the formal offer.
So who are the major players actually doing this lending to foreigners? We mentioned Bangkok Bank and Kasikorn Bank.
They're the most common and the most traditional. They're the ones requiring those substantial down payments, around 30% and up.
And offering the shorter terms and higher rates.
Exactly. They're the benchmark for strict adherence to all the rules we just discussed.
Then you have United Overseas Bank, or UOB. They seem to offer a bit more flexibility.
They do, especially for condominiums. And they might even consider potential rental income from the unit in their evaluation, which is a big deal.
And their down payment.
It can be slightly lower. Typically starts around 20 to 30%, which can make a huge difference. And then there's a very niche, specialized offering,
IDBC.
the Industrial and Commercial Bank of China.
Yeah. What's fascinating is that they target a very specific global market.
So what's their product? It's called the Foreigner Housing Unfunded Financing, and it's typically for properties over 2.5 million Thai baht. Because of their core client base, this product strongly appeals to buyers from Hong Kong, Macau, and mainland China.
A good example of how financing can be highly regionalized.
Sure.
So if those traditional bank criteria, especially that 40% liquid down payment, don't quite fit your profile, you'd need an alternative.
Absolutely. The traditional bank routes are just not a one-size-fits-all solution, so alternative options become really valuable here.
One alternative mentioned is a joint venture, teaming up with a local Thai investor. What are the benefits there?
You gain two major advantages. First, you get local market insight and a partner who can flawlessly navigate all the local paperwork and regulations.
Yes, second.
Crucially, for lending, this collaboration significantly increases your credibility if you do approach lenders. It might even open up lending streams only available to Thai nationals.
The other big option is developer financing, especially for new builds or off-plan projects.
Yes, even though we know banks usually won't touch those off-plan units,
Right?
developer schemes can be extremely accommodating because they're trying to sell units quickly. They often offer extended payment plans, sometimes spread over the entire construction period.
And sometimes even low or zero interest financing.
They will, occasionally. But that sounds like a dream deal, and there's a massive catch.
Which is?
This is the ultimate caveat. You must always check the developer's reputation and financial stability thoroughly
Before signing anything.
before agreeing to any in-house financing. If that developer runs into financial trouble, your deposit and all your staged payments could be at serious risk.
Whereas a traditional bank loan only funds the property after it's completed and legally registered.
Precisely.
Okay. We've successfully navigated eligibility, we've secured pre-approval, found a completed condo, and the bank has made the formal offer. We're at the finish line, signing the loan agreement.
And this is a vital step that requires patience, not speed. You need to carefully read every single line of that agreement.
To detail the interest rate, is it fixed or variable?
The full repayment schedule, every single fee attached. You need legal clarification before you put pen to paper. What happens if you pay early? What happens if you miss a payment?
So what does the land department actually do? We hear this office is the final gatekeeper.
Think of the land department as the official government entity where the ownership transfer and the mortgage registration officially happen.
It's the legal checkpoint.
It is. The bank works with them to ensure the property title is clean, no outstanding issues, and most importantly, they legally tie the loan to the property title.
They record the lender's security interest.
Meaning, if you default, the bank has the legal right to claim that specific asset.
And that very last step involves paying the registration fee, the bank disperses the funds, and the mortgage is officially recorded on the title deed.
When you get the keys.
You officially become the owner, subject to the loan terms.
So if we summarize this and connect it to the bigger picture, getting a mortgage for a Phuket property is definitely possible for foreigners. But it's a process that demands immense patience and extreme financial readiness. It requires that significant upfront cash, that 30 to 40% down payment, and strict adherence to very specific employment and residency rules.
So what does this all mean for your final choice of property? Given that banks overwhelmingly prefer lending against fully owned, completed condos, which are simple collateral, if you're planning to purchase one of those luxurious villas where land ownership laws for foreigners are inherently complex, how will that lack of traditional bank financing affect your long-term investment strategy?
Your exit strategy, your resale value.
That is something you absolutely need to mull over before setting your heart on a specific property type.
And for expert guidance in navigating these complex financing options and securing your dream home, we strongly recommend you reach out to the professionals who wrote this guide, who have been doing this successfully in Phuket since 2004.
You need specialized advice.
You do. For that, visit oceanwwp.com to start your property journey today.